Good morning, ladies and gentlemen. This is Shawn here, bringing you a little bit about 3 reasons gold will climb to $1,500 this year by Myra P. Safong, published this morning at 3:16 a.m. about a little bit over an hour ago. It is now 4:22. So we're going to jump right in here and see what's going on with this market thing, this market watch. It says U.S. global investors Frank Holmes sees return to 2013 levels. Last time gold futures hit $1,500 was April 2013. Gold prices could jump to $1,500 an ounce this year, a level they haven't seen since 2013, according to Frank Holmes, Chief Executive Officer of U.S. Global Investors. That would mark a roughly 11% rise to the currency price, as April gold futures JCJ8 minus 0.11% traded under 1345 on yesterday. Monday it was at 1351. Who knows what's going on with these prices. Says despite pressure from the rally in global stocks and massive cryptocurrency speculation, gold futures have edged up nearly 3% year to date, outpacing a 2.4% gain in the S&P 500 index. The SPX minus 1.73%, according to Holmes, a well-known gold bull. Says he cites 3 key reasons for his forecast to climb up for precious metal, the first of which is tied to inflation expectations. Inflation could be growing a lot faster than what the government is telling us, he told Market Watch in an interview this week. The Federal Reserve's preferred gauge, the Consumer Price Index, rose 2.1% year on year in December, and the New York Fed's recently launched underlying inflation gauge rose nearly 3% that month, while the alternative CPI estimate, which uses the official methodology before it was revised in 1990, shows inflation closer to 10%, he said. No matter which gauge you look at, inflation is trending up, said Holmes. Gold is traditionally seen as a hedge against inflation. Holmes also pointed out that weaker dollar policy will always benefit commodities and emerging markets. Year to date, the ICE US dollar index DXY plus 0.41%, which measures the greenback against 6 currency rivals, trades roughly 3% lower. Holmes believes that President Donald Trump's actions as president overall have been bullish for gold, particularly as they've contributed to a decline in the buck. Americans like to hear that the dollar is strong, but a weak dollar makes American exports and tourism rock, not to mention gold prices go up, he said. In early 2017, tongue-tied twister, the Wall Street Journal, that the U.S. currency was too strong And in January of this year, Treasury Secretary Stephen Mnuchin, look at me go. Mnuchin, go figure that one out, appeared to back a weaker dollar, pointing out that it would be good for the U.S. as it relates to trade opportunities. Still, one of the obvious headlines that has potential to be negative for gold is the tariff wars, said Holmes. This could result in a stronger dollar, which would be bad for gold. Gold and the dollar often move inversely, as a rich dollar dulls the appeal of investors using other currencies. Meanwhile, rising gross domestic product features in China and India continue to help with that, what Holmes characterizes as the love trade. That refers to the coveted yellow metal's popularity as a gift in the form of jewelry, particularly from the beginning of the Indian wedding season in September until Chinese New Year in February. Gold prices may even eventually climb to new heights at $1,900 an ounce. Holmes said, if we see inflation ramp up like that, then we could see gold move to new heights. Gold futures reached a record settlement at $1891.90 on August 22, 2011, and major lawsuits against the big banks could have profound impact. He said if massive dumping of gold and market manipulation, which has happened during the Chinese New Year, when people are away from the trading desk, are outlawed, then gold could rise to $1,900 an ounce. Holmes also said that there is a company that he believes will disrupt the North American gold jewelry industry and potentially contribute to a rise to new heights for gold. Mean sells what it refers to as 24-karat investment jewelry, designated by Pablo Picasso's granddaughter, Diana Widmeyer. Picasso, go figure. It prices jewelry according to the value of the metal without a big margin for design. This could change the way Westerners view precious metals ownership, Holmes said. He doesn't rule out a possible run lower for gold, however. A strong dollar could cause gold prices to dip. He said interest rates that trigger a global recession where governments don't come in too big to fail and print lots of money. Hold on a second. Interest rates that trigger a global recession where governments don't come in too big to fail and print lots of money. And the finance ministers who are consumed with synchronized taxation and regulation and unlimited printing of money could also hinder the price of gold. Go figure. Who comes up with all this crap? Obviously somebody with a lot of money. I don't know. Just thought you guys might want to know this stuff. Some of you like gold, some of you don't. I don't know who don't. But, anyways, I'm going to get out of here. It's 4:31 in the a.m. on the East Coast, and I'm going to try and get a little bit of sleep. So I will talk to y'all later. Take care, have a great day. Like, subscribe, comment, and I'll be getting back to you guys as soon as you comment. Thanks. Bye.